Hello guys, I'm Adriana, and in today's video I will be answering a question that a lot of you have been wondering lately. Is it actually a good time to buy Apple stock? To get to that answer, I'll be going through their financials with you guys. We'll give you an overview of their business. We'll explain what is going on with the company on China, in the US and worldwide. And at the end of the video, we'll give you guys my opinion if I'm planning to buy this stock or not on May. But first, let me know in the comment section below what you think about Apple. Do you hold any Apple stock? If you do so, since when? And if you don't, are you planning to buy any? After all that, let's get started. Obviously, you all know what they do as a company. And if you don't, then you've been living under a rock. Their business is divided in two segments at the moment. One part of their business is their product sides, which are their iPads, their Macbooks, their AirPods, their Apple Watch, iPhones, and yes, this is the iPhone 4S. It was my very first iPhone. Since I'm using my latest iPhone to film this video, then they have Apple TVs and a bunch of other products. And then the other side of their business is their service side. Apple TV Plus, Apple Music, iCloud, Apple Arcade, and Apple News. Still, what I think the people like the most about their business is their ecosystem, which I'll explain later on the video. Even though the bulk of their business and the big profit driver for Apple is their iPhone, it has been in a decline since 2015. Although they had a little increase last 2 years, it decreased again 14% last year, 2019. Now, their growing business at the moment are their service business, which has more than 450 million paid subscribers, and the wearables, home and accessories devices business, which are their Apple Watch, HomePod, AirPods, Apple Care, iCloud storage, and you get the point. As you can see here, their business service is been increasing exponentially year over year, from $32 billion in 2017 to $40 billion in 2018 to $46 billion in 2019. It had a growth of over 16% from quarter 2 of 2019 to quarter 2 of this year, 2020. Now, their wearables, home, and accessories business is growing even faster than services, from $13 billion in 2017 to over $24 billion in 2019. That's around 90% growth in 2 years, which is crazy. Then, on a quarterly basis, in comparison to last year, it increased 23%. I don't expect these business numbers to decline anytime soon, since what they are doing with it is phenomenal. Apple is the most profitable company in the world. It's a massive company with over $1 trillion in market cap. Now, they have a trailing PE of 23.13 and a forward PE of 24.69. I've been following this company since I started investing in 2017. I know it's not a very long time, but it's enough for me to say that this PE is very, very high. Yes, they are an awesome company, very profitable one, have an excellent management team and everything, but normally they trade on a PE between 12 to 18, even before I started investing, as you can see here in the graph. Oh hey, I'm here just to say that don't forget to subscribe, smash the like button for the YouTube algorithm. Thank you. Now, let's check their financials. They had an increase in their revenue of only 0.5% in comparison to quarter 2 of 2019. And yes, quarter 2 might be one of the slowest ones for them, and even more when they got hit by the virus situation, since they had to close all of their stores worldwide. But if we compare their best quarter, quarter 1, which it ends on December, they had a growth of almost 9% in revenue in comparison to quarter 1 of last year, 2019. With these results, I can conclude that they are not exponentially growing as they used to do before. As you can see in this graph, until 2016, the company actually had a very good growth, but after that, it has been a little bit of a roller coaster for them. Obviously, I don't see Apple ever disappearing. They are a very safe business, has always been. I will always continue being like that. I do not see people swapping to other brands. It doesn't work like that. What normally happens is that if your iPhone breaks, you go and buy another one, and it most likely be another iPhone. Same happens with tablets, iMac, MacBook, and everything else. It's difficult for people to actually switch from iOS or macOS to Android or Windows, or the other way around. You are always going to get another Apple product when yours is old or broken because you are used to it and you like their ecosystem. They have something really big coming up, which is their 5G iPhone, which in my opinion, it will impact their business in their revenue and profitability. I know that there are already other brands like Samsung that came out with 5G phones last year, But we know that Apple does not like to be the first one introducing a big innovation to the market. They like to let other players come out, test it, see how they do, and how people react to it. And then Apple comes with it when they are ready and feel comfortable. Obviously, as I said, 5G will impact in a good way their revenue and profitability, and even more if they come up with a cheaper phone like the iPhone SE with 5G, since the majority of people cannot pay thousands of dollars on a phone. I do think that this possible impact is already priced in, which is why the stock has been soaring over the last 6 months. You all saw how people reacted with their new iPhone SE, which is basically a phone with all iPhone 11 Pro's features but in an iPhone 8 shell and costs 60% less. I do have to say that for this year I do not expect a huge impact on Apple's phone sale with the iPhone SE because of COVID-19. People are focusing more on limiting their purchases to essentials. However, if this economic crisis continues throughout the rest of the year, I do see a change in consumers' behavior, opting to buy a new iPhone SE instead of a higher-end iPhone. Now, Apple has a good balance sheet at the moment, but obviously it's not as great as it used to be some years ago, and you're going to see why I'm saying this. Currently, they have a total of $94 billion in cash and cash equivalents and marketable securities, which has increased about 6% since last year. Total current assets of $143.7 billion, total assets of $320 billion, then total current liabilities of $96 billion, which is good since it decreased more than 10% in the last year, and a total liability of $242 billion. Now, let's calculate the ratios. If we take the current assets and divide it by the current liability, we get a current ratio of 1.5, which in my opinion is very good since that means that they are able to pay all their current debt that are due within 12 months. Now, if we take their total liabilities and divide it by the total assets, we get a total debt to asset ratio of 0.755, meaning that they have a 75.5% of their assets financed with debt. Still, if we subtract all their long and short-term debt from the current liabilities, we can see that they can actually pay all their debt, convert into a debt-free company, and still have money left over. Yes, I said that they used to have a better balance sheet before because, as you can see here, in 2013 and 2014, they used to have a total debt to asset ratio of around 0.40 and 0.50, which is amazing, and they used to have a bigger growth year over year at the moment in comparison to this year. During the pandemic, Apple borrowed $8.5 billion with a bond deal. A lot of people might be wondering why they would do this if they have a big cash pile at the moment. In my opinion, they are taking advantage of these low interest rates and increase their liquidity to give the company operating flexibility without the need to bring cash from overseas and face a huge tax rate. Apple offers a dividend yield of 1.12% and has a payout ratio of 26.48%. which it means that they still have a lot of room to increase their yield. They have been increasing their dividend constantly over the last years. Analysts are expecting them to have a growth of only 1% in revenue for this year 2020 and then 12.50% next year to almost $300 billion. Also an increase of almost 4% in their earnings per share in 2020 and almost 20% in 2021, which would be amazing for the company. Personally, I do think that Apple is a huge company, very profitable one. It's a business that will continue growing, but I don't expect to see an exponential growth until they come with a huge new device like the 5G phone or something very innovative. They are a very big company and it's difficult to boost up their revenue when you get to those levels, which is completely normal. I don't own any Apple stock at the moment, even though I used to when I started investing. I remember that I bought at a very good price of around $150 and $170 and sold it for a 40% return within months at around $224, since I felt it was unbelievable how fast it grew and I thought it was very overvalued at the moment. Well, I still think that it's very overvalued at the moment, and I'm not saying it will not go up anymore. Maybe it will. They are the biggest company in the world and that is difficult to achieve. But I don't feel comfortable buying at these prices since, as I said before, any short-term positive impact is already priced in. If the stock ever gets below $200, I would definitely consider buying it again. But maybe we never see Apple getting to those levels again. Let me know in the comment section below if you think it's overvalued, undervalued, or a very good price. If you own any Apple stock or if you're planning to buy any. That was all for this video, guys. Thank you for watching. I really hope you enjoy it. Don't forget to subscribe, smash the like button for the YouTube algorithm, follow me on my Instagram. Stay safe, stay home. Thank you, and see you next time.